Hi guys, this is C. Devang Maheshwari from Equialpha.com. First of all, congratulations to all those who got Happiest Mind IPO and made a killer money on the listing day itself. That's around 122% listing gain. And sadly, I didn't got any of the shares in any of my family accounts, and I usually have a bad luck with IPO. However, that's not something to be worried about because we have 3 IPOs which are lined up for the coming week. The first one is CAMS IPO, the second one is Angel Broking, and the third one is Gemcom Specialty Chemicals. So with the IPO craze back, in this video we'll discuss about CAMS IPO, whether you should invest into CAMS IPO, and if yes, then what's the percentage of listing gain that you can expect from CAMS IPO. So keep watching this full video, just subscribe to this channel and press the bell icon right now. First of all, let's understand about the business model of CAMS. CAMS services are very closely related to mutual fund industry. Mutual fund industry, we all know about different asset management companies like HDFC, Kotak. We also know Motilal Oswal Mutual Fund, IDFC Mutual Fund, etc. etc. So there are a lot of asset management companies. Now, there are various businesses which provide support services to the entire mutual fund industry, and CAM is one of them. So what are the services that CAMS provide? CAMS provide services to mutual funds like handling up of mutual fund units, payout redemptions, transaction processing, handling up of different client queries, KYC processing. Also, it provides different services to the distributor. For mutual fund distributors, if they want to do up some offline mutual fund application, they can do it through CAMS. If they want to update KYC, they can go and do through CAMS. And CAMS have different offices around. So that is the service that CAMS provide to mutual fund industry, and also these are all IT enabled services. These are very deeply related to technology, and it just helps upon in focusing the asset management companies to their core part and leaving all these support services, transactions, redemptions, settlements, payouts, all these services to someone outside who can do better than them, and they focus on their core area. So CAMS provide all these services to the mutual fund and to the distributors and also to the investors. So if you want to update your KYC, if you want to invest in multiple mutual funds at a single place, you can go to the CAMS office nearby and then directly apply to them. So that's a one-stop solution for the investors also, distributors also, and the mutual fund industry also. Now the second thing is, how does CAM earn its revenue? So CAMS earn its revenue on the basis of overall AUM that it is handling on behalf of that mutual fund. Like for example, if it's handling an AUM of 100 crores for a particular mutual fund, for example say IDFC, then they have a percentage slab with the charge upon on the total AUM and they get up their money. For example, for the equity mutual fund AUM, they gain around 0.06%. For debt, they gain 0.022%. Now, this percentage might sound very small to you, but understand, they are handling crores of AUM. So, when you are handling 5,000, 2,000, 3,000 crore of AUM, that 0.06% also comes out very good. The growth of this entire CAMS is closely related to mutual fund AUM, as I said in the beginning. And to your knowledge, the mutual fund AUM industry is expected to grow by 18%. So that's the overall growth rate for mutual fund industry, and it's very positive. If you look closely onto the business model and the revenue that I said about to you, it is a very sticky model. Sticky model in terms of there is high entry barriers because it's extremely difficult for a mutual fund asset management company to change its registrar and transfer agent. So CAMS provide these all registration services, transfer or the mutual fund units, all these services, and it is also called as registrar and transfer. So it is very difficult for an asset management company to change up these because it involves a lot of data security, it involves a lot of trust, a lot of cumulative amount of things that keeps going on to there. So it's extremely difficult for that to change, and that's why these are not replaceable. Some of the industry facts that now we'll look onto is that what are the different players apart from CAMS that are into the same space, that provide the same set of services, that are also the registrar and transfer agent. So basically there are 3 players now. First is CAMS. CAMS holds around 70% market share. Second one is Carvey Fintech. The Carvey Fintech holds around 27% market share, and the third one is very small, and that's Franklin. So if you look upon to the industry is basically two leaders. One is CAMS and the other is Carby Fintech, with CAMS holding 70% market share. So the industry is more of a duopoly structure in which only there are two players that are running the entire show. The overall services which CAMS are providing, that registrar and transfer agent services, are expected to grow by 15% CAGR for the next 5 years. So that's a very good growth rate. If something that is about 12-13% growth rate CAGR basis, it's a good growth rate. So as also you can confirm with this with the fact that the AUM is also going to increase by 18%, and this will certainly be behind it, and it will catch up slowly and slowly. Now let us look on to the financials, that what are the financial for CAMS. So we understood business model, we understood how they earned revenue, we understood about the industry structure. Now it's time to look onto the financials, that whether after doing all these services, are you able to generate upon sales? Are you able to generate upon profit? So let me first tell you about revenue growth. The company has generated around 700 crores in revenue in the last fiscal, that is ending upon March 2020, and the overall CAGR for the last 5 years has been 13% growth rate. Looking on to the PAT margin, the company's PAT margin is around 24%. It generates a return on equity around 34%, as the entire business is very asset light and IT enabled, so you don't need heavy capital expenditures to run down your business. And from the overall revenue, around 86% of the revenue the company gets from mutual funds. Now if you look onto the profit growth CAGR, the profit growth CAGR has been around 16%. So that's a very good profit growth rate also for the last 5 years, and it generated around 173 crores of profit in financial year 1920. So the sales growth for last 5 years is around 13% CAGR, and the profit growth for the last 5 years is around 16% CAGR. That gives you a reasonable idea about that the entire industry is a very growing area, and it's not expected that in the next 10 years, 20 years, the area will be less down in the growth rate. Because if you look onto the entire India, currently AUM to GDP is around 12%, which is comparatively very low if you look upon to different nations. If you look upon China, it's around 13%. If you look on Japan, it's around 40%, and US, the AUM to GDP is around 120%. That gives you reasonable assurance that this is not just for listing gains, but this entire CAMS can be for a long-term holding, because it's trade free, it's generating good cash, it's paying out good dividends, the return on equity is good, the PAT growth rate is good, the sales growth rate is also good, the industry is very sticky, and that's by a nature of only two players into it. So that's a duopoly also. Now let us come to the objects of issue, that for what purposes they are raising amount and what's the amount that been raised. So the company is currently raising around 2,244 crores, and the entire raising is by way of selling by the existing shareholders. So the existing shareholders are selling and want to get out of the company for whatever the reasons are. The total market cap at the higher price band of around 1230 rupees will be around 6,000 crore market cap. So after at this current listing issue price, the entire market cap comes to around 6,000 crores. Now the last part, which is the valuation part, and we will also look now onto what can be the listing gain. So if you look onto the valuation at the upper price band of 1230 rupees, the company's P multiple comes around 35 multiple. Now there is no direct listed pair, but there is a way to compare upon. If you look upon to the different intermediaries into the stock market like CDSL, MCX, BSE, we can look upon their multiples, because all these businesses are also in somewhere duopoly range. Like in CDSL, you have CDSL, NSDL, MCX again very big player, then BSE again the second largest listing exchanges. So if you will compare to these listing exchanges, we get a good idea about whether the valuation is reasonable, overvalued or undervalued. So let's look on to the valuation of first these three. So MCX currently trades around 35 P multiple, BS trades around 32 P multiple, and CDSL is around 39 price multiple. So if you look onto these three companies and compare that with the CAMS, then you can get that the CAMS IPO at 35 is not very undervalued. It's at a very at par kind of situation, and for those reasons I don't expect that there can be a bumper listing gain like Happiest Mind of 120-130%, because the company is like very good valued. So what I expect is that there can be a listing gain of 20-30% for certain because of the entire IPO craze and because of the fundamentals and the solid fundamentals that the company is holding, but I don't expect it around 120-130%. Though these three companies are not directly related to the services that CAMS provide, but these are all somewhere intermediary into the stock markets, and CAMS is also in indirect way through mutual funds and intermediary into the stock markets. So all these stock market based intermediaries, for your example, for your information, are doing currently very good. So CDSL has doing very good, BSE is also doing currently very good, M6 has also doing very good on stock markets, and for those reasons all these exchange based companies, all these intermediaries around stock markets are gathering a good pace. So the overall sector, the idea is to tell you that the overall sector is doing very good, and half of your work is done if we are within the right sector. I expect a listing gain of around 20-30%, but this company is more of a long-term holding, so you can allocate some percentage of your overall portfolio to such kind of duopoly businesses which are very good in nature and which gives good dividend also. So that's about the entire CAMS, the revenue model, valuation, listing gains. I hope you like this video, and just subscribe the channel and press the bell icon, because the next two IPO around angel broking and also about CAMS specialty chemicals, that will also be coming soon. So stay tuned for more updates. Thank you for watching. CA Devang Maheshwari.